All right, let's do a little briefing for all you investors out there on an absolute giant in the tech world. This is a company that's so critical yet so hidden that most people have never, ever heard its name. We're going to dive into TD SYNNEX. So let me ask you a question. What if I told you that one of the most critical players in the entire global tech supply chain is a company you probably can't even name? Well, today, we are going to change that. Because this company, TD SYNNEX, pulls in $60 billion in annual revenue. And no, that is not a typo. $60 billion. We're not talking about some small niche player here. This is an absolute behemoth, operating right at the very heart of the tech industry. But what does a company this huge actually do? Well, the best way to wrap your head around it is to think of them as the circulatory system for all of technology. They're what's called an IT solutions aggregator. They are the ascension middleman that takes products from over 2,500 vendors, the big guys like Apple, HP, Microsoft, and pumps them out to this massive, sprawling network of over 150,000 customers all over the world. So let's get right into it. How does this invisible giant actually operate? What's the business model? The model is actually pretty simple, but it is incredibly powerful. On one side, you've got the tech giants making all the products we know and love. On the other side, you have thousands upon thousands of smaller companies that actually sell and install that tech. TD SYNNEX, they're the critical bridge smack in the middle. They handle the logistics, they handle the financing, all the complexity. They just make the entire ecosystem work. Now, their business is really split into two main buckets. First, you've got Endpoint Solutions. This is all the hardware you can actually see and touch. PCs, phones, printers. It's a huge business, and it's driven by when we all decide to upgrade our stuff. But the really exciting part, especially if you're an investor, is Advanced Solutions. This is the complex, high-value infrastructure, data centers, cloud, AI, cybersecurity. And let me be clear, this is the engine that's really expected to drive all the future growth. A $60 billion business doesn't just happen by accident. So let's talk about the competitive fortress, what investors call an economic moat that protects this company. Their advantage is really built on four huge pillars. First off, just their unmatched scale. It gives them incredible purchasing power. Second, there's a powerful network effect happening. The best vendors want to be on their platform because that's where all the customers are. And of course, customers go there because they have all the vendors. It's this perfect virtuous cycle. Then you layer in decades of deep relationships and the absolutely insane amount of money it would take to even try to replicate their global logistics. You put all that together and you have a fortress that is just incredibly difficult to attack. And this chart just says it all. Look at that revenue line. TD SYNNEX is more than double its nearest competitor. Now, here's what's really interesting. You'll notice their margins are lower, and that's not a weakness. It actually tells a story about their business. Their peers are more exposed to the super cyclical electronics components market. TD SYNNEX, on the other hand, is focused on finished IT products, which gives them a more stable, even if it is a lower margin, foundation. Okay, time to pop the hood and look inside the financial engine. Because if you're an investor looking at this company, there are a few quirks to their numbers that you absolutely have to understand. Right. The most crucial thing to get here is that you have to look at two different numbers, not just one. You've got GAAP revenue, which is the official number, but because of some accounting rules for certain software sales, they can only record their profit as revenue. So management also reports non-GAAP gross billings, and that number shows you the total value of every single thing that moved through their system. It gives you a much better feel for their true market share and their incredible scale. This timeline right here tells the story of the last few years perfectly. You see that massive jump in 2022 right after they merged with their biggest rival, Tech Data. They basically doubled overnight. Then, there was a dip in 23 as that post-pandemic PC buying frenzy cooled off, but look at 2024. They're already back to growth. It just shows you how resilient this combined business is. Now, let's talk about what might be the single most powerful and most misunderstood strength of this entire business model. It's a concept called counter-cyclical cash flow. And here's why this is so important for an investor. When the economy slows down and sales dip, what happens to most companies? Their cash flow dries up, right? Well, for TD SYNNEX, the exact opposite happens. As sales slow, they sell off their existing inventory and collect payments, which actually unleashes a flood of cash into the business. Think about that. This allows them to get financially stronger during a downturn and go out and aggressively buy back their own stock when the price is low. For shareholders, that is just a beautiful thing. Okay, so the core business is a fortress. It's stable. We get that. But where does the growth come from? Well, that brings us to their really strategic pivot. See, they're not just sitting back and collecting checks on the old business. This chart shows that already more than a quarter of their business comes from what they call strategic technologies. And these are the high growth areas that are set to blow past the rest of the IT market. So, what are we talking about here? Well, these are the engines. Their Stream One platform makes them a key player in the whole cloud ecosystem. Their Destination AI program is putting them right at the center of the AI revolution. They have a massive cybersecurity portfolio, and get this, they are perfectly positioned to capitalize on the next big hardware upgrade cycle, which is going to be driven by AI-powered PCs. This right here, this is the growth story. Of course, no investment is a sure thing. So that brings us to the final verdict for investors. What are the risks? What are the rewards? And what might this company actually be worth? It really breaks down like this. The bull case is pretty clear. They're the undisputed #1 market leader. They have a management team that has proven they can execute. They generate fantastic free cash flow, and they're pointed right at the biggest trends in tech, AI and cloud. The bear case? Well, it's a tough, low-margin business. It's definitely tied to the economy, and you always have to worry about that long-term risk that vendors or marketplaces could try to cut them out of the deal. So when you look at the valuation, it trades right in line with its peers, maybe at a tiny and, you could argue, a justifiable premium, given that they're the market leader with a more resilient business. I mean, on a forward PE of less than 12, it certainly doesn't look expensive for the top dog in the industry. And here's one final, absolutely crucial point for investors. Management is incredibly friendly to shareholders. They have been buying back stock like crazy. They reduced the share count by almost 6% in the last year alone. And on top of that, they just raised the dividend by 10%. They are serious about returning cash to the people who own the company. So at the end of the day, it all boils down to one question you have to answer for yourself as an investor. Is TD SYNNEX a stable, dominant giant that's just going to keep reaping the rewards of its incredible scale? Or is it a low-margin commodity business that's facing the constant threat of long-term disruption? The answer to that question is going to determine its future.